Crowdfunding real estate. It's a hot topic in the real estate world. It's so hot that so many people are diving into it. But what are the pitfalls? What do you need to look out for? That is today's show. Let's get to it. Here we are at our very first rental property. Hey everyone, I'm Clayton Morris, longtime real estate investor, founder of Morris Invest, and back in 2017 left my day job in the television world to pursue financial freedom and to help other people build financial freedom through real estate investing. We here on the show talk about buy and hold real estate, but it can come in many different forms and fashions. It can be mobile home parks, it can be residential single-family properties, commercial properties, or it could be investing in crowdfunding. What in the world is crowdfunding? Well, my guest today is Roderick. He left a very boring corporate job, as he likes to say, and as an attorney, decided to get into the world of crowdfunding. He writes widely at his blog, crowdfundattorney.com, and he joins us today from Cherry Hill, New Jersey, right outside of my birthplace. Born in Philadelphia and grew up up until I was about 7 years old in Cherry Hill, New Jersey. Mark, welcome to the show.
Thank you very much. It's a pleasure to be here.
Well, thanks so much for joining us. And I guess it's starting to snow down there in Cherry Hill, my old stomping grounds. And everyone loves to get freaked out about the snow. It's like, November, and people are like, "Oh my gosh, we're gonna be off school for a week?" How is it down there? Are people already freaking out?
They are absolutely freaking out, even though none of it is going to stick. But once it starts snowing, that's the big story. And the newscast will have a winter storm warning,
right?
And everything that goes along with it. And people start driving at 5 miles per hour, even though the road is just wet. So it's always a lot of fun in this part of the country.
So tell me about your blog. I'm going to put your blog up here on the screen, the crowdfundattorney.com. How did you said you were left to this sort of, or you live in a very boring corporate environment, but you decided to really start talking about crowdfunding and getting involved in this. So kind of take me back on this process. How did you get started in the world of crowdfunding?
Yeah, so in my career, I've always represented entrepreneurs and their businesses, including a lot of real estate developers, in all the stuff those folks do. And as you know, in the real estate world, everyone is always looking for capital. In general, entrepreneurs spend a lot of their time looking for capital. So I've always represented entrepreneurs, including a lot of real estate developers, in raising private capital and all the legal stuff that goes along with that. So when I saw the Jobs Act of 2012 coming onto the horizon, I said to myself, this is going to be super cool and disruptive and transformative, because as I always say, although crowdfunding has a lot of complicated legal rules, fortunately, because then you have to hire me. It's really simple. It's just the internet. Crowdfunding and the Jobs Act is just about the internet finally coming to the capital formation industry. So I saw that. I said the industry is in need of disruption. Gigantic industry. This is the biggest change to the securities laws, the laws around raising capital, since they were created back in the 1930s. So this is something that I want to be involved with. It's going to be a lot of fun. It's going to be a cool ride. And that's how I got involved. And it has indeed been a cool ride.
So let's talk about this disruption a little bit. And what did it look like before the Jobs Act of 2012? And what does it look like now? Can you walk us through, just talk to me like I'm a talk to me like I'm a fifth grader, and I really do not understand this at all. Someone listening to this show for the first time has no idea what it looked like before and what it looks like after.
Yeah, and I should say that that's how I write my blog, too. I sort of address maybe eighth graders, but I try to make it accessible. So, great question. I'm going to jump back in time very briefly, back to the 1930s when our securities laws were written after the Great Depression. And there are a few fundamental concepts in our securities laws. One of those concepts is that there are two kinds of offerings, public offerings, big offerings like the kind Facebook would do, registered with the SEC, all kinds of, thousands of pages of information, all public, all vetted by government regulators. That's a public offering. And then the other kind is a private offering. And private offering means private, very limited information available. And one of the tenets, the cornerstone of our securities laws, has been that you can advertise public offerings, but you cannot advertise private offerings. So if you've been a securities lawyer over the last 85 years, that's something you sort of learn in the cradle. You learn in law school, and you just take it as a given that you can't advertise private offerings, meaning small offerings, the kinds of offerings that real estate folks are always engaged in. Well, as the result of not being able to advertise, if you wanted to raise money pre-Jobs Act, you had to start making phone calls. You called your friends, you called your lawyer, you called your accountant. Do you know anyone who might be interested? You relied, that is, on a series of private networks. You relied almost, it was like throwing darts. How do I find someone who might be interested? And some of the private networks, in the New York area, you have the family offices, and they're kind of networked together, but all very inefficient and opaque, being the opposite of transparent. And whether you could raise money depended, therefore, on whom you knew. What college did you go to? What graduate school did you go to? Were your parents members of a country club, and all that kind of thing? Just if you think about it, and you've probably been through the capital raising process, very, very inefficient.
Mm-hmm.
Well, the Jobs Act comes along and brings along with it the internet. Well, what does the internet do to industries that are very inefficient and opaque? If you think about it, every industry that the internet disrupts, whether it's the hotel industry or the taxi cab industry or any other industry, what the internet does is directly connects buyers and sellers and gets rid of middlemen. Okay, so that's what happens with Amazon. It's what happens with Uber. It's what happens with Expedia. We get rid of the middlemen. We directly connect buyers and sellers. We make information available to everybody. And in the investment world, the capital formation world, right, the buyer is the investor and the seller is you, the real estate developer. And now, for the first time in history with the Jobs Act, you as the developer can reach over the head of all those middlemen, all those inefficient, opaque networks. You can put up a website and reach, theoretically, every single investor in the whole world from your website. And, for the internet, that's nothing new. That's what the internet always does. But in the world of U.S. securities laws, that is a revelation. That is a monumental difference, that you can now reach all these investors. So theoretically, now it doesn't matter whether you live in the San Francisco Bay Area or in Iowa. You can reach every investor in the world. It doesn't matter where your father works or whether your parents are members of the country club. You can reach every investor in the world. And I apologize. Sometimes when I talk about this, in fact, always, I sound like an evangelist, but I sort of am. But you can see why I was excited when I saw that the Jobs Act was going to bring this disruption to the capital formation industry.
I think we're seeing it in real estate in general. I think we're going to see it certainly, realtors are starting to really feel the pinch, the future of real estate in general. What's that going to look like for real estate agents? We're already seeing it in the appraisal space. No one's becoming an appraiser anymore because software is replacing appraisers. The Economist magazine did a great piece just on this exact topic a few months ago. So crowdfunding. So the internet opens this up. It explodes this way of connecting with people who might want to buy into a particular property, become part of your project. Let's just say, for an example, I have a plot of land. I'm going to build a hotel on this plot of land, and I take to the internet now, and now I'm going to raise capital using this new way, this crowdfunding way, using the internet to do it. Walk me through that process. Me as the potential hotel owner, developer, what would I be looking at? What things would I need to put in place in order to attract people to invest in my project?
Okay. Well, everyone sit back because I'm going to answer that question for the next 4.5 hours. No, I'm just kidding.
And we'll try to fit it into the 15 minutes remaining.
Yeah. Okay. But I'll try to give an overview and touch on the highlights. So the first thing I will say is that crowdfunding ultimately is a marketing business. So the question you've asked, although there are some legal answers to it, and I'm a lawyer, so I'm going to give you some of those in a moment, the sort of at the very last part of your question, you asked, well, how do I attract investors to get into my deal? And that is indeed the $50,000 question, as they used to say, because there are, as you all know, there are lots of websites out there, and a lot of those websites, have stuff that is more attractive to look at than a hotel. And so the question is, well, with all the billions of websites out there, and all the other advertisements, how do I get people to come to my website and to be interested in my particular deal? And if I had an answer, the key to unlock that door, we probably wouldn't be doing this interview today. Marketing is indeed sort of the piece of crowdfunding, the most important piece that nobody can provide to you. Okay, sure, here, you hire me and I'll go raise $3 million for you. No one has figured out exactly how to do that. And that is the piece of the puzzle that is really still evolving. So the first thing I say when I get calls from folks who want to do crowdfunding and they're asking me legal questions, I always make sure that they know that the hard part is getting people to invest, getting people to come to the site. Okay, so I just want to make that clear. So without getting into a lot of detail on the legal side, there are different flavors of crowdfunding. When the Jobs Act was enacted, it had 3 different parts, which are called titles. That's how laws are divided. And the Jobs Act delivered 3 flavors of crowdfunding in 3 titles. So we talk about Title II crowdfunding, Title III crowdfunding, Title IV crowdfunding. And each of those is very different than the others. Title II, the most common, is where you can unlimited amount of advertising. You can only accept so-called accredited investors. Many of your listeners probably know what that means. Title IV crowdfunding is more like a mini public offering that requires a big process of going through and getting SEC approval. And Title III crowdfunding, this brand new kind of animal, all done online, subject to all kinds of restrictions and limitations, among which you can only raise $1 million a year. So, depending on the type of the project, the amount of capital you're looking to raise, from a legal point of view, you would choose whether to use Title II crowdfunding, Title III crowdfunding, Title IV crowdfunding, all the while keeping in the back of your mind, how do I sell this? How am I going to market this? Now, for a first time user of crowdfunding, the big decision you make is whether to do it yourself, whether to have your own website, your own advertising, try to drive investors to your site yourself, or whether to list your project on one of the few very high quality national real estate sites. The benefit of using one of those sites, and I'll just mention two, Real Crowd and CrowdStreet. The benefit of using those sites is that they have at their sites hundreds of thousands of investors who are already registered. So they've done all that hard work to bring people to the table who might be interested. You pay for that. So the downside of using the sites, of course, is that there's a cost, but that's kind of an early decision that the first time entrepreneur needs to make. Do I try to do this on my own, or do I list on one of the existing sites? Just as if you were building a product, you had come up with, you had built a better coffee maker, you could sell it yourself from a website, no problem. It's hard to bring people to websites, so you might want to sell it in an existing retail distributor instead. Same kind of decision making process, and do it. You are going to be there. You switch to a website, one of them, Real Crowd, and that website reaches every real estate investor in the world. So
So
that's
that's a
kind
big
of a
question,
big
whether to put
picture
it up there.
overview.
Yeah, no, that answers a big question of it. So we put a deal up there, and with the few minutes we have left, let's say we've got this hotel, we choose one of the options that we're putting out there, we decide to put it up on this website. How do we structure it, and what do we need to look out for if we are going to invest in a project like this? First of all, you mentioned being an accredited investor, right, to invest in one of these projects. So you have to have a certain threshold of people that you're dealing with. What do you as an investor need to look out for when you're investing in one of these things? How do you know that it's a legitimate deal and that you're not just throwing your money blindly at something? How can you protect yourself?
Okay, fantastic question. And this is the answer. When I'm asked, look at crowdfunding from a real estate investor's point of view, what's the first thing you should look out for? In my view, if I'm an investor, I only invest in deals at those national sites. I do not visit a random website and invest with someone that I don't know. So that's my own personal, and I'm an investor myself, that's my own personal first rule of thumb. So those sites vet their deals, okay? They vet deals, they vet developers, because their business depends on putting good deals on their sites. Those companies are entrepreneurs too. If they list a few deals that turn out to be, scams or frauds, they're out of business. So they spend a lot of time and a lot of energy making sure that the people and the deals that they're dealing with are real.
How do they structure, if you don't mind me asking, on the back end,
Sure.
when they put one of these deals up on their platform, they are vetting it, of course. Who do we pay? Where does that money go? Because we hear the scary stories about, okay, all of this money is coming into one pot, and then this one company, this one website is using that one pot of money to pay for a project over here, when it should have been going to fund the project that you invested in over here. So how do we know where that money is sitting? As a lawyer, is that something that you would vet in that process when you're working with one of these large national
Yeah.
sites?
Again, these sites, the top sites, they do not commingle money. That money goes into escrow accounts, segregated escrow accounts held with national financial institutions. So the sites themselves actually never take control of those of your investment dollars. Your investment dollars go into an escrow account maintained for the benefit of the issuer. So once the issuer, achieves its minimum, let's say they say, well, we're trying to raise 2 million, we'll close with 1.5 million. Your dollars go into a bank or a trust escrow account. They're held until they reach their minimum, and when they do, the money is released to the issuer. The website, the Real Crowd or the Crowd Street, doesn't have access to those dollars, can't touch those dollars. So that's all been vetted and is actually pretty clean. As an investor, if you're investing at these sites, you just need to make a decision as to what kind of deal you want to be invested in. We've had a gigantic, enormous run up in the real estate market over the last 10 years, and I think everyone is waiting for the other shoe to fall. And so the question is what sector you want to be invested with, what geographic areas, what asset type. In terms of your money being stolen from these sites or misdirected, that is, at this point, I guess you can never say never, but that is an extremely low risk.
Yeah. Well, and we could get into where the riskier sectors are, but we're running out of time here. So on the last question, I wanted to ask you, Mark, where do you see crowdfunding going from here? Into 2019 and beyond, where do you see this going? And as you talk about the other shoe to drop, we're starting to see some fissures and cracks right now in Australia, a really high-priced market. We're starting to see some fissures and cracks there. Are we going to see sort of a top-down collapse and a correction coming? So putting that aside for the moment, just in general, where do you see crowdfunding going in the future?
Well, crowdfunding, as I say, is just the internet, and I say that with all seriousness. So once the internet comes to an industry, I'm not aware of an industry where it has contracted. The internet part of it tends to grow. So the market, the crowdfunding, particularly real estate crowdfunding market, does continue to grow. The deals are becoming better and better. Just a few years ago, crowdfunding deals meant investing in a single family home fix and flip project. That's what real estate crowdfunding is. Now you're investing in very sophisticated, tremendous deals. Bigger and bigger developers are getting involved, so the deal quality continues to improve. And I just see that continuing. The retail market, we're sort of flirting with ordinary retail investors getting involved. It hasn't happened in a huge way yet, but I absolutely see that happening over the next 5 years. So I don't think it's too much at all to say that if you're a real estate developer in a few years and you want to raise money, the first thing you're going to think about is crowdfunding, internet. Right. Just as if you're making a plane reservation today, what's the first thing that comes to your mind? Do you call a brick and mortar travel agency? No. You go online, and I think that's the future of real estate crowdfunding.
Yeah. Well, my guest has been Mark Roderick. Thank you so much for joining us. We really appreciate it. Thank you so much, Mark, and shedding some light on crowdfunding. It's the first time we've done an episode on it here. We'll have to have you back to dive a little bit more deeply into it.
I would love it. Yep. Thank you so much for having me on the show. And as a real estate investor, I think I better sign up to listen to your other your other interviews, because I sure as heck would like to know where the market is going also.
Yeah, please do check that. We've had a couple of big interviews recently, and we're going to have Harry Dent back on the show to talk about some of the big moves in the market as well. So, Mark, thanks so much for joining us, and we'll link up all the resources we talked about on today's show in the description below, so people can check out your blog and also the websites we talked about. Thanks again, Mark. We really appreciate it. And thanks to all of you for downloading and subscribing and making us one of Inc. Magazine's top business podcasts and video shows out there. We really appreciate it. Thanks for sharing this. Our whole goal with this channel is to help you build financial intelligence so you can make informed decisions about your financial future, creating passive income and building that net worth so that you're not tied to that day job any longer. We'll see you next time here on the Investing in Real Estate Show. Now go out there, take action, and become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.